Hello everyone, welcome back to Chill Deal Trades, where I analyze stocks so that you know what's going on. Today we're going to cover VIRT. We're going to break down both the fundamentals of the company and the pros and cons, what we're seeing financially as well as the news and those kind of aspects. And then we're going to jump into the charts and kind of look at the technical aspect of kind of how the charts are looking, if they're looking healthy or unhealthy, and maybe where the stock could be headed. So please hit that sub button and join the squad. Thank you everyone who has hit so far. We've quickly grown to over 100 subs. This community over the last couple weeks, so I really appreciate it. But let's go ahead and head into the stock. So as I mentioned, this is covering VIRT, which is Virtu Financial Inc. And the basic way to sum up what they are, if you're unaware, if you don't know about the company, is they're a market maker. And so basically they're the people that when you're going to buy or sell a security, say through Robinhood or TD Ameritrade or whatever your provider, there's a bid and an ask. And so they're kind of the person who helps facilitate the transactions through the bid and the ask, and they're making money through that process. So that's a really easy and simple way to understand it. And these kind of companies are considered market makers. They kind of help the stock market function on a day-to-day basis when people are buying and selling securities. So as that kind of brings us to our next point, is the stock's kind of gone down pretty significantly over the last few weeks. I think it's around 10%, if not a little bit more. And the main reason is because last month, the new head of the SEC chairman basically said they're going to start exploring changing the rules on how basically the markets function. And so there's been a lot of, I would say, scrutiny with companies like VIRT, as well as Citadel, which is a very similar company where they're on the back end doing shady things. So these, I think they call them dark pools, or these kind of off-market transactions that happen and they flood them into the market. And there's just been a lot of scrutiny. And so basically the chairman said, we're going to start exploring, not even making changes, exploring making changes. And this could potentially impact the stock substantially, because either this company is going to have to shift their business model, or they could potentially be wiped out if there's a severe change in how the market flows happen. And this brings me personally to my first reason to buy or not buy. It's kind of, I'm not really giving you an answer, but I would say this is where the risk is there could be regulation coming, which would significantly impact this stock over the coming years. But on the flip side, I think there was a really big overreaction to this. Like, what you don't realize is the SEC comes out all the time about everything and says, we're thinking about this, we're thinking about that, we're considering this, we're considering that. And what happens is it takes years and years and years. If they are going to change kind of how the flows happen, it's going to take years and years and years for that to happen. And so when I say, I'm not saying 1 year, 2 years, I'm saying like 5, 6, it could take 5 or 6 years, because to make a change like this, they're going to have to completely flip how the markets function, and that's going to take time and energy to recreate it. And I don't think this is actually going to come to fruition. There might be new small regulation changes, but I don't think anything substantially that's going to hurt VIRT as a company holistically. So that's kind of my first pro and con for this. Next thing I want to jump into is just into the valuation. How's the stock looking? And so kind of when we break it down, they have a market cap of about $5 billion, and they do $3 billion in sales a year, at least more recently. They definitely make some money, which is, I think, one of the reasons why I like this stock is they actually have income. And these are the stocks I've been looking at more recently, as we've seen the markets break newer highs, and some of these more value names, I would say, being forgotten. These are the stocks I'm trying to buy on the dips. And so when I look at companies that are, I guess, quote unquote, more stable, even though this is a relatively small company, I really want to see dividends. And so this has a 3.5% dividend. So this is a stock that I'm looking to potentially buy for the next couple of years. And I want to be paid regardless of if the stock goes up and down. And so I like that 3% dividend, and I like that they make money. And that doesn't look like it will be changing anytime soon. The next aspect I like is their PE ratio. So this year they're at about a 5, and it's mostly because their income rose, I think 100%, or their revenue rose 100% this year. So that's why we do see the forward PE jump quite a bit. But when we look at the industry standard, it's about a 13 or 14 PE ratio. And so technically speaking, this company is still undervalued compared to the industry average. And so even though I think this forward PE is probably undercutting, I think, how much money they're going to make in a couple of years, which we'll cover. There's a Discord message. And that brings out, join the Discord. The details are in the description. We're growing that community, which is pretty awesome. So those are a couple things to look at there. Share float is also something I look at quite a bit. And the main reason is this is not a huge huge float. And so that tells me that this stock can easily have lots of swings in days and weeks. Because it doesn't take a lot of volume to push the stock upwards or downwards. And so that's just something you have to keep in mind, as a stock could be more volatile than maybe your Apples or your McDonald's or your Walmarts of the world. And so that's just an aspect that you have to put into if you purchase a stock. When we look at short float, it's only at 3 or 4%, so that's a really big positive. Even though the stock has come down, we don't really see shorts piling in it, which means there's, in my opinion, there's still a lot of people who believe in this stock in the long term. And the last thing I want to look at is institutional ownership. So we see institutions owning a large percentage of this business. And so we do see that come down, or insiders do sell recently, but seeing institutions own such a large portion of this company is very beneficial in my perspective, because it says there's some people who believe in this company quite a bit, and that's not changing. Even though there's these concerns around regulation and changes, institutions are still holding on to the stock. So let's head on to the next. And I kind of mentioned some of the competitors, but here's a little list of them. So we see VIRT forward moving PEs at about 9. And we see, it's almost at kind of the lows of these competitors listed here. Shout out to Ticker for letting me use their platform. I reached out to them and they're really awesome to give me access. But yeah, around a 10 PE ratio compared to competitors, it's looking good. And that's kind of what I mentioned just a few minutes ago, is they look scrumptious, that's a funny word to use, at this valuation. Something I always look when I'm at stocks is I look at their institutional ownership and kind of how that's been trending over the years. So the stock's kind of been up and down, pretty volatile over the last 3 or 4 years. But we do see institutions always buying more than they're selling. And so this is something I always keep an eye on for a stock, because if I see more selling than buying, okay, sorry if you hear the train there. If you see more selling than buying, then that tells me, that's like one of the first red flags, is why are the big boys selling out? Is there something I'm missing? But we're not seeing this with this stock. For the last 4 years, basically, we see there's always more buying than selling. And so that's a big plus for me in terms of this could be a long-term hold, as long as this kind of situation holds from institutions. What I have on this one? Oh, this is the same thing about competitors. We'll move this over here. Same thing. They're really low compared 19, 12. There's pretty high valuations, and so again, they're pretty well valued compared to everyone else. One thing I've been curious about, because the stock has pulled back so significantly, is if short interest has moved up significantly due to the price coming down. And so obviously when there's bad news, sometimes the shorts like to hawk in and start building short positions. And so we do see an increase, more recently, but it's nothing to worry about. Obviously you see this chart, a pretty significant increase, but that's because the short volume was so small before. With the 100 million shares, we're only seeing about 100,000 flow as of more recently. Like I said, it's nothing to worry about. If this gets into the millions, the tens of millions, that's more worrisome. Of these shorts could be pushing the stock lower. But we have a really low short interest, which is very beneficial, because that either means the stock might come down a little bit more, or go sideways. As long as it's not going down, we're getting paid that dividend, which is a huge plus. The next couple slides, I want to break into the finances of the company just to kind of see how they're looking. And so the first thing I want to look at here, where I'm at, is the revenue. And so as you can see for 2020, look at that fancy chart. 2020 was a pretty big year. And the reason that was a big year is because of all the market volatility. You got to think about VIRT makes money through stocks going up and down and up and down, and lots of volume coming in. And we've seen record numbers of volume in the stock market, and VIRT benefits from that. And so the one thing that we need to keep an eye on is the market's expecting, or I would say that the analysts are expecting market volatility to come down because we're seeing the revenue come down. Less volatility means VIRT makes less money. I think this is something that could potentially be, I think, not a misestimate, and it's because I personally believe the market's going to see a lot of volatility over the next couple of years. I don't think volatility has gone anywhere. As we're seeing, the major indexes spying things go up 1 to 2% a day to the upside or the downside. That's an extremely high volatility compared to historically speaking. And so I believe that this is maybe a misestimate. I do think we're going to come down from 2020, which you have to start considering, okay, if the price has been this high when revenue was as high, maybe the stock price should come down a little bit. So they are expecting, a couple years of dipping in revenue, but I do think that might be a miss, in my personal opinion. 20% down, probably possible, but I think 21 to 22 is probably a little bit of miss, but that's just my personal opinion. A couple other positives. Where are we at here? There's so much data. So EPS, obviously, again, we saw a peak in 2020, but we're still seeing a really healthy number compared to historical numbers. 16 to 19, really low, not very profitable as a company, and we're seeing that profitability increase. And so the reasons we're seeing that, do I have it on here, is their net margins. I think I'm on the wrong one. But we see their net margins increasing, and we'll look at that in a second. But there's a lot of positives saying for the health of this company overall. Revenues are extremely higher than they were a couple years ago, and I personally think they're going to stay up in this $1.5 billion kind of range moving forward. And we're seeing them more profitable as we're looking at the EBITDA numbers compared to prior years, as well. Their EPS is looking a lot more healthy. So these are all positives in my book for the long term of this company. Let's go to the next. Here we go. So a couple things I want to keep an eye on this company is how their expenses go as the revenue is going to be decreasing. So we do see the expenses have gone up quite a bit as revenue has increased. So we're going to keep an eye on if this revenue keeps increasing. That could be a red flag if they're spending too much, even though revenue could be coming down in the coming years. And the last thing I want to look at is just their ratios. So return on assets, it's at 11% this year, which is, I think, a really healthy number. You want that above 5% typically. Return on equity is extremely high. So the fundamentals of this company is solid, and that's really important. Okay, because I don't want to keep this video too long, let's go ahead and jump to the charts. Okay, as I said, they've kind of had a downturn recently, and I would say in the short term, the price that we want to look at are these 200 EMAs and SMAs. So we did come down and test the 200 SM, I think that's SMA, yep. But we're not quite to the 200-day EMA yet. So I'm going to say this is a price range. If we see more downside, we're one I'm going to keep an eye on. Positive is on Friday the stock did move up in after hours, so we did break this downward trend line. Now, so we're going to have to see, there's a couple probably scenarios. Say one is the stock comes back down under that line, which is probably not realistic. Second thing is it kind of comes like this and we see a new trend line to the downside created. Those are the more bearish scenarios. But we are holding, when we look at long-term trend lines, we are still above the long-term trend lines, which is really healthy. Again, we want these 200 SMAs and these long-term trend lines to hold in the short term for this uptrend to continue, even though we had a big sell-off. We have a lot of volatility in the past, I would say between $22 and $25. And so if the stock does come back around that range, we're probably going to consolidate there some more. And I would say that would probably be the bottom in my opinion, unless we see something terrible happen in the market. So even if this stock does come down $3 to $4 more, I think that's an opportunity to add to your position as you are getting that dividend that doesn't change over time. Well, for them, they have never decreased their dividends, which is a really big positive. So the chart's looking relatively healthy, even though the pullback, the fundamentals look healthy. So I think this is a stock that you want to consider for your portfolio. Tell me what you think. What do you think about this stock? Do you think it's a good buy? Do you think regulation is going to come and it's something that you shouldn't think about? I really would love to know your perspective. That's all I have for you guys. Thanks for coming in and checking out the video. Please sub if you haven't. And let me know your thoughts in the comment and put the like, because the likes always look good. But that's all I have for you guys. This is the long-term stock. This is not a daily charting stock. So keep an eye on it, look at it, and consider adding in your portfolio for maybe a couple-year hold. But thanks again, guys, and I'll talk to you again tomorrow.